Yo, welcome back, everybody. Welcome to video 3. Let's get after it. So, guys, in this video, we're going to be covering the buyer's market. Okay, but before we could even dive deep down into where and how you identify the buyer's market, we need to first go over one specific thing, and that is the equilibrium. Okay. Now, you need to find the equilibrium, or what is the equilibrium? Well, equilibrium is the 50% of an impulse price swing, okay? It can also be 50% of a defined consolidation range, okay? Now, the equilibrium is simply where majority of the trading volume is at, okay? So, in times in this video, I may refer to the equilibrium as fair value. Okay, because there's 3 areas in the market that tell you what type of market you're in, whether you're in a buyer's market, a seller's market, or a fair value market. Okay, now a buyer's market we actually refer to as a discount market, and a seller's market we actually refer to as a premium market. But on this call, guys, we are just going over a buyer's market, a discount market. On video 4, Q will be bringing to you all the sauce and everything you need to know about a premium market. Okay, but let's go ahead and dive into it, guys. So how do we identify the equilibrium? Well, the equilibrium is very simple. If you take your Fibonacci tool and you draw it out, that 50% is going to be the equilibrium, right? 50% is going to be the equilibrium. So all you need to do is you need to identify a clear swing, a clear impulse price swing. Draw your fib from high to low or low to high, and the 50% is going to be your equilibrium. Okay, pretty simple, right? So in this scenario, we can use what we have right here, this big price swing to the downside. Okay, I'm going to draw it from the high to the low, right? Basing it off of this wick to this wick, the high to the low. That 50% is going to be the equilibrium. Boom. I can delete the fib, and there you go. That's our equilibrium. Or if you want to call it fair value, you can call it fair value. All right. But to simply put it, to give you guys a visual, right? Once you identify the equilibrium, you now know that everything below the equilibrium, everything below the 50% mark is going to be a discount market. Okay? And everything above that, everything above the 50% is going to be considered a premium market. In other terms, this would be your sellers and this would be your buyers. All right, but I'm going to delete this real quick because, like I said, we're not going over premium on tonight's call. We're just going over the discount market. Now, guys, if you can't find a clear impulse price swing, there's no need to draw the fib, and there's no need to try to identify the equilibrium. You want something that is crystal clear, an easy move to identify. So it'll be very easy to identify what kind of market you're in. Okay, now you must always know what market you're in. This is very key to taking trades, because you need to know. We all know the trend is your friend, but what exactly does that mean, right? You can be in an uptrend, but be in a premium market. You can be in a downtrend, but be in a discount market. Okay. On a bigger scale, monthly or weekly time frame, you may be in a discount market, but on a smaller time frame, you may be in a premium market. So it's all about being well aware and well organized and knowing exactly where you sit and exactly what market you sit in at that time, right? Because when you're in a discount market, guys, you don't want to be looking for anything other than buys. Okay, so what I mean, guys, is literally anything below this line, anything below, you should only be looking for buys. Anything above, sells. Everything below, buys. So right now, what should I be looking for? Well, the market's currently right here. So should I be looking for any sell opportunities? No, not at the moment. And if I'm identifying this as our high and this is as our low and this is the equilibrium, no, I should never be looking for sell opportunities. We're only looking for buys at the moment because we're sitting underneath that 50% of the equilibrium. Okay. Now you want to really stick to that, guys, because if you can be disciplined enough to tell yourself, right, like give yourself rules. That's what I highly recommend. Give yourself rules. And once you start implementing discount markets and premium markets in your trading, tell yourself, okay, when I'm in a discount market on a daily time frame, I will never press the sell button. I'm going to be patient enough and I'm going to wait for the perfect buy opportunity. Why? Because trading is a game of probabilities. Okay? And if you can increase your chances, your probabilities, why wouldn't you do that? The best way to do that, guys, is to make rules for yourself and stick to them. I'm only going to buy when it's in a discount market. I will never press that sell button. It doesn't exist to me, and vice versa for the premium market, guys. All right, but I'm going to delete this. I'm actually going to draw something over here to show you guys an example of some things that happen that has happened to me a lot. Not so much anymore, but before I was, really had a good understanding of premium and discount markets. This is a scenario that tends to happen a lot to people, but I'm going to show you guys how we can prevent this from happening. Okay, so let me draw this up real quick. All right, so now that I got this drawn up for you, I'm going to show you guys a scenario that happens all the time where people, who know, the schematic, who know, the FU candle or the controlled candle, who know these things, but still, make mistakes. And this is a great example that's going to show you a mistake that you may have made yourself or, may make in the future. I know I've made it before. And it really starts with understanding the bigger picture. Okay, which is why I'm showing you guys on the daily time frame the discount and premium markets. Okay, now looking at this scenario, a lot of people would say, okay, we had the schematic play out here. Here's the FU candle, it shot up. Then we had that same thing. We had like a range of consolidation. It created equal bottoms. It had that controlled candle, and then it spiked up to the upside, right? You have that money here. And then what a lot of people would do is they will go ahead and they will draw out their line here, right? For the open, they draw their line at the 50%. Boom, boom, exactly like you're supposed to do. And then again, right now we have equal lows. We have money sitting right there. So what is everybody expecting? Well, everybody's expecting, a London session is coming around. They're expecting it to come in here and then spike up to the upside, right? So everyone is looking for that buy entry right here to play off of this institutional candle, this controlled candle. But I want to show you guys this. I'm going to take my Fibonacci tool, right? I'm going to draw it from the low, and I'm going to bring it up to the high. Okay, here's the low I was looking at. Here's the high I'm looking at. I'm going to draw a little box as our equilibrium right at that 50%. I'll make it a different color, make it a little lighter. So there is our equilibrium. Okay, so now knowing where the equilibrium is at, okay, what kind of market are we currently at right here? Well, we are in a premium market. So in this time, we should not be looking for sells. Not only are we in a premium market now, in our entries, based off of this controlled candle, we are still in a premium market. Premium seller's market, meaning we are only looking for sells. We are not looking for buys. So a lot of the times people get caught up in a scenario like this, where London session opens, it drops, they buy, they get excited, and all of a sudden it tanks. And they're like, well, why was I wrong? We had a beautiful setup. You say look left, go right, do this, but you didn't understand what market you were in at that time. Okay. You know, people always say, how do I know if it's going to go to this controlled candle or this controlled candle? Well, understanding what market you're in will help you and will give you a good understanding of where the market wants to go, right? Realizing that we were still in a premier market at this time was meaning that we weren't looking for any buy opportunities. Now, identifying this controlled candle, we can do our analysis over here, right? We'll do the 50% and the open. Let me zoom back in. So again, everything below the equilibrium is a buyer's market. Boom, right? We now dropped below that equilibrium. Okay, now anywhere in this zone, now we can start looking for that buy opportunity. Yes, you know, times in here you can catch a nice little move up, but we are looking at the grand scheme of things. We're looking at the bigger time frames. We are trading with the big ballers. We don't want to trade with the retail guys, okay? Because you know, if you want to be a self-sufficient trader, you want to trade with the big ballers, okay? But now the market has came in. Not, you know, don't just buy because it's in a buyer's market. Don't just sell because it's in a seller's market, right? Buy because it's in a buyer's market, and everything else that you know and that you're going to be learning is telling you, okay, now is a great opportunity to buy the market, right? Market now came in here. All right. Well, now here's a great opportunity. We can maybe start looking for that buy to come up, take all the liquidity that is up above these highs and as well as above this high over here, you know, take profit one, take profit two, so on and so forth, guys. But this right here is huge, right? Understanding what market you're in is huge, and you must understand not just on one time frame, but on multiple time frames, what market are you in? Now, because picture this real quick before I wrap it up. If the monthly time frame says buyer's market, weekly says buyer's market, daily we're in a buyer's market, 4 hour, 15-minute, everything is saying we're in a buyer's market. Now that's some heavy confluence. That's some heavy confirmation telling you where the market wants to go exactly. And it will be so easy to capitalize on those trades. All right. That being said, guys, if you have any questions on equilibrium or buyer's market, just let Q or myself know. We are here to take great care of you, and we want all of you guys to become absolutely outstanding traders. So let's get it. Continue to study, watch the video again, and I will see you guys on the next call. Let's go.